Good evening and welcome back everybody to episode 32 of Quickfire Crypto, where we keep you informed on a bi-daily basis. If you're interested in keeping up to date on all things crypto, then subscribe to the channel. We put out a new video every 12 hours. So this evening we're going to be talking about an article from the Wall Street Journal, and it's written by Caitlin McCabe and Rachel Louise Ensign, and it's titled FTX Crypto Customers Worry They Will Never See Their Money Again. And Matthew Hayes says, "My blood is boiling. Some were optimistic a week ago, now they are increasingly losing hope." And as we said before on the channel, the chances of people getting their money back, the average retail investor, is just almost zero. The money just isn't there. It's gone. It's been spent and abused. Customers of beleaguered crypto exchange FTX are losing hope they will ever see their money again. The company's massive financial problems began spilling into the open early this month, and FTX was quick to halt withdrawals from its international unit. American customers had hoped they might be luckier, but many of them haven't been able to get their money out either. "My blood is boiling," said Matthew Way, a fundraiser for an Illinois orchestra who has about $1,800 stuck at FTX. Where the money could be and whether it will ever arrive is anyone's guess. FTX filed for bankruptcy on November the 11th. John J. Ray, the company's new CEO, has also unwound Enron in the past, said in a court filing Thursday that only a fraction of FTX's digital assets have been located and secured. Determining how much cash is left has been difficult too, according to the bankruptcy filing, since FTX didn't keep an accurate list of its bank accounts. Now, the chances of retail investors like you and I of getting any money back that was held on the FTX exchange in your user account are, to put it bleakly, zero. Almost nil chances of you getting that money back, unfortunately. It's very bad, it's very sad and unfortunate, but this is the reality. And if you've been following the channel, you will have we've commented on this in previous videos. And this actually, the chances of retail getting any money back is zero, but also this can happen in the legacy financial world as well. But what's different about FTX and this whole saga is that actually now the institutional investors, like the venture capitalists and the investment funds and hedge funds that were exposed to FTX, are now also having to mark down their investments to zero as well. That very rarely happens in the traditional world, because they get out quickly. They get out before. They usually have some news or some rumor, or they know the CEO. They know there's some trouble coming, or they can smell it, and they decide, right, well, let's get our money out now. The risk is too great, and then when it does collapse, they're already gone, leaving you to hold the bags, so to speak. But in this instance, it was such a huge scandal that actually everybody got hit, including, Sequoia Capital was a company that was exposed to FTX. They've already come out publicly and said that we've marked that investment down to zero, so they don't expect to get a single penny back. And the reason is there is no money left. There's nothing to get back. The money's gone. So it's not as if they've found out that there's been criminal things going on, and then the bankruptcy court can then take and liquidate all the assets and then pay back the creditors. There is nothing to take in this. There's nothing to liquidate to give back to creditors. So it's just how would anyone be able to get any money back? It doesn't exist. So that's the problem that we're dealing with here. FTX said in a statement Saturday that it is working to maximise recoverable value for stakeholders. "I respectfully ask all of our employees, vendors, customers, regulators and government stakeholders to be patient with us as we put in place the arrangements that corporate governance failures at FTX prevented us from putting in place prior to filing our Chapter 11 cases," Mr. Ray said in the statement, who is the new CEO. Mr. Way, the orchestra fundraiser, was drawn to FTX in part by the buzz. The exchange came recommended by the social media influencer Kevin Pathrath, known on YouTube as Meet Kevin. A lot of people have really been hurt by this, and it's not actually, normally you would say what can happen certainly in trading is that we have this saying in crypto called FOMO, this fear of missing out, and people jump into something because they think it's going to go up or because it has gone up. and they think, right, well, it's just going to keep going up, so I'll throw some money at it, and then later I'll take my money out and I'll make loads of money, and everything's great. But in actual fact, that's not very intelligent thing to do. However, with this is just pure criminal. There was nothing wrong with the way people behaved. I always say don't keep any funds on an exchange anyway. But these were trusted people. This was a trusted business. It was supposedly regulated. It was supposedly, the founder was known, SBF. It's not like it was run by some anonymous founder and anonymous co-founders like you get in crypto a lot of the time, and they run off with the money. This guy was known. It was regulated. He was in with the bed with the politicians. So the chances, everyone thought that the chances of him actually doing a runner was close to zero, but obviously that's not been the case. The next morning, FTX filed for bankruptcy and Mr. Bankman-Fried resigned. As of Sunday, a message from November the 10th remained highlighted at the top of the FTX US website. Withdrawals are and will remain open. Mr. Wave 43 is still waiting for his money, and I think he'll be waiting a very long time if he doesn't come to an agreement with himself that he's not going to get the money back and just write it off. Meanwhile, he has soured not just on crypto but on the people who hyped it, including Mr. Paffrath, the internet star Mr. Paffrath, who has said he can earn millions of dollars a year doing out investment recommendations on social media, apologised in an interview and said he feels terrible. This is a scar on me as an influencer. And there's lots of people that were promoting FTX. It was a huge company, and they were really on top of their marketing. They would pay influencers on YouTube, people on Twitter, all kinds of content creators they would pay to promote their products and promote their exchange. And of course, the influencers are not to blame. I really feel sorry for the celebrities in America that are now being sued because they put their name to FTX. They didn't know. There's no way they could have known what was going on, because if they did, they wouldn't have done it. They just would not put their neck on the line like that. It just doesn't make sense. So maybe they're going to get sued and maybe it gets thrown out of court. I don't know. We'll see what happens. And I don't know the true involvement. Maybe they were more involved, but we'll see. It just on the surface of it looks a little bit unfair when actually the real criminals were SBF and Caroline that were running the exchange itself, and basically hoodwinked everybody. They're the real criminals here. In an email to the Journal on Friday, Mr. Bankman-Fried continued to say that customers of the US unit should be fine. To my knowledge, FTX US has funds to process customer withdrawals, he wrote. However, the Chapter 11 team apparently is unwilling to process them. The new FTX CEO and the company's bankruptcy lawyers made clear in court filings that Mr. Bankman-Fried doesn't speak for them or FTX. The former CEO continues to make erratic and misleading public statements, Mr. Ray, the new CEO said in a court filing. FTX is hardly the first crypto exchange to collapse, but its demise has been particularly jarring. Until this month, it was one of the 5 largest in the world. Mr. Bankman-Fried was often viewed as a steadying force in a volatile industry, throwing lifelines to other companies in need. So this is another reason why I think a lot of companies and a lot of retail investors trusted him, was because he was actually, well, he was known as the JP Morgan of crypto, in that he would help out, or he would bail other companies out in the crypto sphere that were in trouble, or that were trying to raise money because they were going through, because of the recession and because of COVID, they just didn't have enough money, and they needed an injection of cash. And he would come along and he would help. He would throw 60 million, 70 million. I think he helped with Voyager, which was a company that ended up going down in the end anyway, so he lost that money. And this just gave him sort of a robust. It looked like he was resilient and robust, and that nothing was going to happen to him because he was the guy that was helping everybody else out. So you would think that he would have been in an extremely strong position himself financially. That wasn't the case, obviously, as things have played out. But behind the scenes, FTX played loose with customer money. It lent billions of dollars of customer assets to fund risky bets at its sister trading firm, Alameda Research. In traditional finance, brokers must keep customer money separate from other funds. So like we've said on this channel before, brokers and exchanges when you put money on a brokerage account or a forex, foreign exchange account, and you want to trade fiat currency, so let's say you want to trade the euro against the dollar or the dollar against the yen or whatever it is that you decide you want to trade, you obviously deposit your money in, and then you make the trade, and then you can pull your funds out. The brokerage cannot then start playing with your money and start messing around and start trying to get yield on it, putting it into other investments, starting putting it into stocks or other things or venture capital. You just can't do that. It has to keep it absolutely separate to protect the customer. Because if you don't, this happens. There's risk whenever you whenever you try and take capital and try to get a yield on it. There is always risk involved, however small. So just as, for example, you would deposit money in the bank, you want to get interest, you put $1,000 in the bank. You get your 2% or 1% interest, whatever it is. It's very low at the moment. But by putting it in the bank, you are not in possession of that cash anymore. The bank is now in possession of that money. So that's a risk. That's a third-party risk to you. But without that, if you'd have kept the cash on you, you would get no interest if you were holding the cash for yourself. So there's risk. Whenever there's yield, there's always risk. And so that's why an exchange should not be doing anything other than just holding it. And the business model for an exchange is that they basically make money from fees, so from trading. So if I want to trade the dollar against the yen, I will make that trade. They will charge me a fee, sort of like a handling fee. For all the time that I'm in that trade, they will be charging me a fee, usually every hour. In crypto, it's every hour. I believe it can be every 4 hours. It depends on what you want. But they make money from fees. They don't need the yield. If they take that money and then, like is what FTX has done, they take that money, your money, and then start using that in other things. That's just totally not allowed. It shouldn't be doing it. It doesn't need to do that. That's greed. They make more than enough money just on fees alone. The crypto firms that relied on FTX are now feeling the pain as well, a sign that the destruction in the crypto industry will be felt far and wide. BlockFi, for example, paused withdrawals and is preparing for a potential bankruptcy. And there's also Genesis, which is a sister company of Gemini. Gemini being a massive player, especially for retail and for pension funds and all kinds of things like that, as they run a security called GBTC, which is kind of a derivative of Bitcoin. And they are now saying they've halted withdrawals a few days ago, and everybody started saying why. And then we found out that Genesis were trying to raise $1 billion because they just didn't have enough money to process the withdrawals. So they've been playing with the money as well. They shouldn't be doing this either. These are exchanges, well, they're a brokerage, but they shouldn't be doing this either. And then now we've heard that they only need $500 million to process the withdrawals. So it's all really get your money off the exchanges. Don't leave it on there. It's really dangerous to, at the moment anyway, to leave any money whatsoever on exchanges. Get it off. Drake Lyle of Nashville, Tennessee deposited $2,700 onto FTX last year and used it to buy small positions in Bitcoin, Ether and Litecoin. He expected the value of his crypto holdings to slide around. He didn't expect FTX to implode, and nobody did. Otherwise nobody would have used the exchange. So anybody saying that they knew they could see this happening, that they knew it was going to happen, it was too good to be true, is nonsense. If that was the case, nobody would have used it. No one's going to put the money on something that they think is going to implode. They're just not going to do that. So it doesn't make sense, and it's charlatans thinking that they can see into the future. It definitely seemed credible, like a Charles Schwab of crypto, said Mr. Lyle, who was 25 years old. He tried without success to withdraw his money, which he said had shrunk to $800 before the bankruptcy filing. That's a nice vacation for me and my girlfriend, Mr. Lyle said. That's all the Christmas presents for my family and friends that I was going to buy. So it's very sad. Everybody's hurting. It's just a really dire situation. Mr. Lyle is considering joining a class action lawsuit filed last week against Mr. Bankman-Fried and the celebrities who endorsed FTX, such as Tom Brady and Stephen Curry. Adam Moskowitz, an attorney involved in the suit, estimates his office fielded more than 1,000 calls and emails from investors around the world in the 24 hours after the lawsuit was filed. FTX spent heavily to attract new customers in the crypto boom, emblazoning its name on the venue where the National Basketball Association's Miami Heat plays dropping a Super Bowl commercial early this year. This is one of the problems, is that in crypto we've got a reputation, for anyone that's been involved in crypto for a long period of time. When I say a long period of time, I'm talking 2 or 3 years. Crypto companies come and go, and they go bust, and there's a lot of anonymity about it, and a lot of scams. People starting up ghost companies, raising money, saying they've got a great idea. They take money from investors, retail investors, and then they run away with the money, and there's nothing you can do about it. But because FTX and because SBF had put their names on in the big sporting arena in Miami, and I think they'd paid $20 million or something like that to have their name on it. Everyone just thought they're just being so overt and so extrovert about how they were doing it, and they were just great marketers. We just thought, well, they must be solvent. There would be no way. Why would they not be? Why would you do all these things if you weren't solvent, and then bailing out other companies? It just seemed unimaginable that they would themselves go down. But nobody knew what was going on behind the scenes, of course. So lastly, many crypto newbies had never given much thought to the likes of Bitcoin, but the pandemic gave them time to experiment, and the ever higher prices were easy to get excited about. Some customers embraced active trading, using platforms such as FTX to try to time the market. Others thought they were taking a safer route by using FTX to park their money as if it were a bank deposit, but paying a much higher yield. The part about customers trying to time the market, take it from me, you can never time the market. Nobody knows the future. Nobody knows when the bottom is in. Nobody knows when the top is in. Really, the only people that say that are either lying to you or they're mistaken. There's just no way to know it. Just as in real life, nobody can see into the future, and the same is in trading, whether that's traditional trading with Forex, or whether that's crypto trading with cryptocurrencies. So be careful of that. You use that to your advantage. And really, you don't need to know the top, and you don't need to know the bottom. You can make a profit in that big chunk in the middle by buying not at the bottom, because you don't know where it is. But when you think it's low, when you think it's gone down so much that the risk is comfortable for you, and you can tolerate that risk, you can get in. And then when it goes up, you don't need to pick the top. You can get out before the top, and you've still profited. You've still made money, and you haven't. And you don't need to trade that ego. You don't need to get in at the bottom. You don't need to get out at the top. You just need to make money. That's the only important thing here. I think a lot of people forget that. They concentrate on being right. They want to be right. They want to say when the top is and when the bottom is. And that's not the important thing. The important thing is making money. So that's what I've got for you today. Remember, everybody, to subscribe to the channel. Join our team. We'll keep you updated on all things crypto every 12 hours. Smash the like button if you feel you got value from this video. And I'll see you all in 12 hours.